As we all know, we had a Fed cut. I want to start by getting the panelists' opinion here about the Fed and what they thought about today's action and what are they expecting in the future. So you want to start?
Yeah, sure. Hi, everyone. Hopefully you find Fed talk interesting. Usually most people get very bored when we talk about the Fed, but it was, I think the first thing to note about the Fed cut is that barely anything happened. And interestingly, it was a really high-risk event. A lot of people, especially in the industry, were thinking that this first move by the Fed would literally trigger apocalypse. Because people in the industry have been talking for a year and a half now about how the first Fed cuts tend to trigger a recession, which is not necessarily true.
Were you surprised at all?
I was not surprised. It was basically, the talk was 25-50, and either 25 bips cut or 50, and it didn't really matter. There was so much emphasis on 50 may actually. In fact, I think there was a big article by Hayes about how a 50 bip cut would be a disaster for the industry and macro in general. No. And it didn't really matter because what really matters is the long-term plans of the Fed, basically what they plan to do for the next year and a half, and also, more importantly, how Powell handles the room, which he's become very good at handling the room.
What do you think, Richard? Has he been good at handling the room?
Yeah, I think so. I think to me the biggest takeaway was that whether it's proven right or wrong in 6 to 12 months' time is the effective official trajectory now is for accommodating monetary policy for the next 18 months to 2 years. So starting to run out of excuses for crypto not to start performing like a sort of high beta tech type exposure that it should be, and I think we've sort of crossed that sort of peak in monetary policy where it's now becoming supportive, and with the inflation sticking a little higher than probably where it usually is at these sorts of times, you're starting to get to pretty close to zero or negative real rates, which we all know is great for almost all asset classes.
Yeah, and what about over the next year? The projections, are you in line with what the market is expecting, and you concerned that the economy might soften more and actually have impact on underlying activity?
No, I think today things seem to be going kind of to plan, but 6 months down the track, to see where we're at. I mean, inflation to me is probably the sort of the key risk, right? Like whether they seem to be pretty confident they've got it under control. Numbers look okay, but they're not great, right? And I'm coming from a country in Australia where they definitely haven't got it under control. So there can be kind of spot fires, but it feels like after last night, the market's not going to worry until they're told otherwise.
Okay, Darius, what's your Fed take?
Well, the last time the Fed did this cutting cycle, we saw Bitcoin go nuts. I think there's a good chance that happens again. Inflation is a concern more than anything else, right? I think the yield curve is steepening, the two stands are steepening, so the market is concerned about that as well. I think the one impact that is probably interesting is that that other central banks would probably see this as aggressive and continue their cycle, or rather have even more conviction to keep cutting as well. So the whole world goes into a bit of an easing cycle, positive for assets, and then push the whole inflation worry down the road. But in the meantime, I think hard to be bearish at this point. As history repeats itself, I think we see the same results in asset prices.
What about there's a bit of a slowdown now in the Chinese economy, and I'd love to get your sense of that being out here in Singapore. I mean, the data in China has been very soft, and I think the 5-year Chinese interest rate is even below 2%. And so we don't in the US really talk much about, we don't really get in too much detail about the Chinese data, but it seems to me that it's had some impact on the overall global inflation.
Absolutely. Well, I guess one of the themes that we've been seeing the last 1-2 years has been this deglobalization as well. Bit of a bifurcation of what's happening in Asia and the US, and divergence as well. So I think China definitely affects, or rather dampens inflation a little bit. but the asset prices are driven by the US market. I think the Chinese effect trickles in, but you start to see a bit of a divergence between real economy and asset prices, stock markets, crypto prices, commodity prices as well. So I guess we will see some effect on dampening, but at the same time, it also causes supply side issues with China, and that at the same time could make inflation worse too.
Yeah, but I guess the bottom line is why do we care about macro at all, right? Like, what's the relevance? And Richard, I don't know how much work you've done in terms of monitoring liquidity cycles, et cetera, but we care about what the central banks are doing essentially for that reason. I don't know if you've done any work linking liquidity and Bitcoin, et cetera, and if you have a comment about that at all.
I think liquidity is probably the best one you can find, but I think at an overall level as a house, we generally take the view that crypto can be pretty uncorrelated for long periods of time. And generally, we see the correlations increase, not at the extremes, but outside of the norm. So in a normal sort of market where asset prices are kind of, volatility is relatively low and asset prices are sort of trending mildly up or mildly down, crypto lives and dies by the idiosyncratic factors that influence it. Things like regulation, innovation, take-ups, those sorts of things. Our view is that correlations increase generally as you get more extreme events, like in 2022 when you see material moves in asset prices or you see substantial rallies, those correlations increase. But as a general rule, we generally think there's the crypto-specific factors generally override in a normal market.
Alex, you do any work on liquidity
I
cycle?
think liquidity is actually a little bit overrated in the industry because asset prices are not really driven by liquidity now, are mainly driven by expectations of liquidity. So that's my take on liquidity mainly. And by the way, sorry, I want to go back to the Fed a little bit. That I think is important to mention is this thing. Gonna restructure what I tried to present at the beginning. Is when the Fed starts an easing cycle, if historically, if they do it in a recessionary environment, asset prices, the S&P specifically, goes up about 12% in the next 6 months, 10%, sorry. And if it's in a recessionary environment, soft landing in a non-recessionary environment it goes up 10%. In a hard landing or recession environment, it goes down 12%. In the U.S., in a recession, in a short recession of let's say 6 months, the S&P historically falls 7%. In a major recession, 35%, and Bitcoin is driven about 60% by the S&P nowadays. So the first move by the Fed is at least considered to be extremely important based precisely on this. And there's this very strong underlying fear in all the macro and in crypto specifically that a major recession is unavoidable. And I think it's greatly linked to PTSD from FTX, to be honest, because the industry suffered so much that we are expecting apocalypse around the corner, where it's not the case.
All right. Well, I'm gonna pull you back from apocalypse because even though I'm a macro guy, I was never big on apocalypse. And normally you'd wait till the very end to ask this kind of question. But given that the liquidity cycle and the rate cuts are just beginning now, where do you think that takes the Bitcoin price? Let's just say a year from now. What are you thinking, Darius? Do you want to?
Yeah, I think a few ways to answer this. Firstly, liquidity cycle, yes, and monetary policy has, in terms of its importance to Bitcoin, might actually be a bit secondary to fiscal policy, right? So you have continued spending, you have wars that are still ongoing, high fiscal spending. That that sets a base. I think another thing that you see is, I would say, the Americanization of Bitcoin, or where Bitcoin has become a lot more an American product because of the Bitcoin ETFs. So you see a lot of a lot more demand and liquidity during US hours through the ETF. So you have this US onshore participating as well. So I think there's a confluence of factors here, right? Strong fiscal policy, loose monetary policy, U.S. institutional guys getting involved, not just in Bitcoin, but in derivatives as well. And then you see a rotation of liquidity out of altcoins and even Ethereum into Bitcoin. And so I think you have a confluence of factors that put a base in there. And we were discussing as well that the world is becoming more and more accepting of this asset class, a frontier asset class, where Tether holds more treasuries than Germany now. So you have a whole digital sovereign economy, so to speak, right? Or rather, the size of a sovereign. And these guys are, to them, Bitcoin is a cornerstone store of value. So you have a confluence of factors here. You of course still have a lot of supply, from miners and sovereign miners that we've been seeing in the news. But I think fundamentally, as Bitcoin becomes more and more, you have Larry Fink going on CNBC saying these things as well. The trajectory looks higher to me.
Okay, well, give me a number. We're not going to let you out of this one. Give us a number. 1 year from now, we're back here next year.
Well, I mean, short-term volatility, and I'm not sure where it ends the year, but next year.
Yeah.
Say, next year, somewhere in the middle, maybe a 100K target is very reasonable.
Okay. Richard?
Yeah, I think the key driver we see across asset classes at the moment is the one Darius mentioned, which is, I think, the stronger kind of macro trend at the moment, and one that you can rely on, because I think it's unlikely to change, is profligate spending at the sovereign level. And when you look across asset markets at the moment, you see a lot of oddities. You see tech stocks trading at relative premiums to yields that we've never seen before. Well, maybe those yields aren't as strong as they've been before, right? Because the government's spending habits make the debt less attractive as an investment, and inflation rates and all those sorts of things. So we think the easiest thing to predict looking forward over the next 2 to 3 years is governments aren't going to change their behaviour, which means that investors are going to look for assets that are further away from government influence and control. And there's no asset with better liquidity, scale and size and further away than governments than Bitcoin. So we think that's a nice macro trend for Bitcoin. It helps the rest of the space as well, but we think things have lined up pretty well. I think the other thing to point that Bitcoin's been pretty strong, but it's actually done a pretty good job itself, right? We've had Silicon Valley Bank. If you look back over the last 2 years, you had the Silicon Valley Bank crisis where Bitcoin rallied, which further entrenched the view that it's a sort of out of system asset of protection, and that becomes reality when it starts to happen more and more. You've seen ordinals and those sorts of things start to emerge to show that there is potential to increase the fee pool and reduce the security risk problem, which some people have been concerned about, probably a little down the rabbit hole to the broader market, but you've started to see a less risky future for Bitcoin. And then you've seen a whole lot of new investors start to pick it up through the ETF. So it's a pretty nice perfect storm for Bitcoin, which justifies its sort of performance, and I don't think it stops anytime soon. So I think six-figure Bitcoin next year looks pretty much inevitable to me.
Okay. Alex, you a six-figure Bitcoin guy also?
Well, next year I think is, let's say 120 if Trump wins. If Trump loses, 80, 85, somewhere around there. What about you?
I'm above all you guys. I'm thinking, 150-ish, this time next year. But it's not about me today. It's about you guys. You mentioned the election, Alex. Richard, you have a view? Does it matter whether it's Trump or Kamala?
Yeah, I think it does matter, and I think for the short term it does. I think if we look at sort of the macro factors we were talking about, I think the reality is if Trump's odds jumped 15% while we were sitting here, that would have a much bigger influence on the market than anything the Fed's done in the last 24 hours. So, rightly or wrongly, crypto's kind of tied to his destiny for the...
Yeah, but I was thinking more about, the impact on regulation and other things. Do you think it matters one way or the other?
No, because I think if you look at a sort of a longer term view, regulation's been trending in the right direction now for some time. Even things like the ETF coming to the market are a sort of a show that remember before that was approved, the day before that was approved, the consensus in the market would have been close to a scorched earth type view of crypto in the US. And we've come around to, as Darius said, to having Larry Fink talking up Bitcoin and crypto's attributes. So I think we've done the 180 there already. Now, when it comes to actual legislation on paper, when that comes, who knows and how it follows. But I think that, the market's kind of moved ahead of that and can see it trending in the right direction. I don't see any reason for that to change.
You'd agree, Darius, that it doesn't really matter whether it's Kamala or Trump for regulatory?
Yeah, I think in the long run it doesn't matter. Like Alex said, there could be some immediate price impact. In the long run, I don't think it matters because guys like Larry are have done a 180. And I think this trend of Americanization increases, right? Where America becomes the cornerstone for Bitcoin specifically as an asset. The ETF actually was not such a straightforward bullish event, as you can see what it did for Ether. It sort of had an inverse effect, right? You get tested to the American investor, and it showed that the American investor doesn't care about Ether as much as they do Bitcoin. So this ETF effect was very specifically strong for Bitcoin, and I think that continues. And more specifically for us, as derivative traders, we're interested in how that translates into a whole suite of products, where it joins there's a whole playbook here for emerging market assets, right? It goes options, fixed income, exotics. The banks and the RIAs start to distribute these products. I think you start to see the American public become very used to the asset class. So you have a very strong adoption on American onshore, and that trickles to the rest of the world as well.
Well, let me ask you then a follow-up question, because you're talking about the Americanization of Bitcoin, but all of a sudden we have this tremendous phenomenon of Tether and stable coins, and clearly, this is the financial use case. I mean, as we said before, this is the simple use case ends up being the best, but that's a non-US dominated area at the moment. Do you want to talk a little bit about Tether and how you see that playing out?
Yeah, absolutely. So I see these two extremes, right, where you have very strong Americanization and institutionalization of Bitcoin as the cornerstone of the digital asset class. Rest of the world, you have Tether anchoring the stablecoin economy, so to speak, right? And I think the future is a stablecoin one. And what do I mean by that? That there's Tether, the big brother, the biggest one, but every community has its own stablecoin. So if you saw this year with the launch of Ethena, right, a more DeFi native stablecoin, it got up to almost $4 billion in 3 months, the fastest growing stablecoin in history, right? And because it had a simple strategy that had Ether yield and basis yield on it. And that I think is a sign or rather a precedent of what is to come. Every community having its own stablecoin, every stablecoin having its own unique functions, and then this becomes the way that the world adopts. There are regulated stablecoins, unregulated stablecoins, high yield stablecoins. It becomes almost an alternative to SWIFT, not just for Asia, for LATAM, for the rest of the world, right? It becomes an alternative to SWIFT. And I think that's where the opportunity is, because you have a stablecoin economy that is bigger than countries, and this economy needs a capital market structure. It needs instruments. It needs the whole gamut, and that's where the opportunity for guys like us come in to be the bridge and provide capital market structure and products for this new stablecoin economy. I think that's where a lot of the opportunities are going to lie in the future.
So Richard, I know your portfolio must be filled with all sorts of different stable coins. Talk to us a little bit about where you see that going.
Well, I think you started talking about the Americanization of Bitcoin and then stable coins in Asia, but they're all US dollar stable coins, right? So whilst it's it's a different use case, it's still being led by the US dollar. And we've always had this. There's always been this sort of tension between this sort of unregulated US dollar market with opening up a whole bunch of global buyers of US dollars that have never owned US dollars before. And say what you will about the American government and monetary policy and fiscal policies, it appears when people in most emerging markets have access to US dollars, they want to grab them. And that's the trend that's driven a lot of the growth in US dollars. You're getting whole communities or whole populations of people that have no access to American US dollar banking will have no prospects of ever getting US dollar banking. I mean, it's hard enough in a market like mine in Australia to get US dollar banking in terms of the hurdles and the size of capital required, let alone in emerging markets. And you've got stable coins coming up.
Yeah, but why don't we have, euro stable coins or yen stable coins? Don't you think that is in our future? I mean, it's remarkable to me. It's just been dull.
But I think if you look at traditional, and we're going a little down a rabbit hole here, but if you look at traditional currencies, the key driver for the fact that we have a lot of currencies is around government controls and regulations. And when you launch currencies into the world without that encumbrance and you allow people to choose, it's pretty clear they want one currency and they've chosen the US dollar. And it makes a bunch of sense. Have liquidity and scale in one currency. Say what you will about the American government, it's probably more sensibly managed than most others from a monetary policy perspective. And so the people choose. And I think we'd probably see the same at a geopolitical level as well. If the government's kind of said open currency markets, choose our local sovereign currency or the US dollar, they'd probably say the same thing, but they're not going to do that.
Alex?
Well, I'm from Argentina, and it's the first thing about Argentina and Bitcoin is that the Bitcoiners think and try to actually sell Bitcoin to Argentina, and they think that Bitcoin is going to solve the problem of Argentines and Venezuelans and every country with high inflation. And the actual reality is that they just want dollars, period. And you go to Africa, they just want dollars. And here in the Far East, international trade is with dollars. And if you have money under the mattress, is on dollars. And the way I think about Tether is like it's basically euro-dollar deposits, basically unregulated offshore U.S. deposits in offshore. Basically, euro-dollars were very large markets. They still exist, very large, very liquid, not as big as they used to. Dominated global markets in the 90s and the early 2000s. And Tether is pretty much the same, but democratized. Like everybody has access to Tether. And the final thing on Tether that I think we're missing, and I'd like to see somebody build on this, is forward curves on Tether to basically incorporate Tether as another source of rates benchmarks in global markets.
Yeah, that's interesting. Yeah, I agree. That would be interesting. A lot of interesting things going on in the last sort of 6 to 12 months. I don't know, Darius, I'm always so shocked at how new areas just pop up out of nowhere. The Bitcoin ecosystem is one. A year ago was a very different place. We've got L2s now, lots of different activity. You have any thoughts about that? And if not, are there certain new areas that you're looking at that you're getting excited about?
No, I think, not just the Bitcoin ecosystem in terms of, yield on Bitcoin. I think staking as a native element of the space becomes, part of the new capital market, right? This is the one piece, staking and validator yields. It's the one piece of this digital asset capital market that will always be native to crypto guys, right? So even if you talk about options, fixed income with Bitcoin underlying, it's similar to traditional finance products. But staking derivatives and all the products that come from that will always be something native, and I think that's something interesting to see. When the banks start to offer staking products, staking derivatives, it's almost like a native yield curve, right? But the most interesting thing I think that will repower the space, so to speak, is credit and rates, right? That was the problem that was really the heart of the problem in the last 2-3 years, right? Poor credit management. So what I'm looking forward to is a proper interest rate market in crypto. You start to see products like the interest rate swaps, a proper rate curve. For that, I think the banks need to be involved, and I think they are starting to get involved. To have proper credit processes and a proper rates market in crypto. So what I really like to see is this convergence of the two worlds, right? Frontier asset class, you have a whole dollar rates, a whole alternative dollar economy, and then you start to see the convergence of these pieces, and things start to get really scalable. Not sure what the path is going to look like to get there, But piece by piece, as the banks start to get involved, financial institutions start to get involved, native guys like us start to dip one foot into the traditional world as well and start to pull things together. I think it's a very interesting future.
I think from a sort of a roadmap perspective, when we started the firm thinking about, as a disruptive technology, how would this roll out? It's following that trajectory exactly as we expected at this point, and we're getting to the exciting part. So, if you look at most technologies and nascent technologies that are disruptive, the first focus is building the capacity and the infrastructure. In ours, we say block space was that. So let's build the underlying capacity to actually handle what we're going to build going forward, and then let's work around and find the actual use cases. The initial use cases that have that real product market fit. The things like the Arvos and the Uniswaps that have now been around for a while and scaling and getting a whole bunch of sort of different users and starting to generate real sorts of revenues and those sorts of things. And we now feel we're in that stage, which is a typical stage of tech where you're in that distribution stage. How do we repackage those products and how do we distribute those products to the global mass market? And we're starting to see that now as we start to see products like Aave and Uniswap become these underlying processes and infrastructure type applications, and Telegram bots and phone apps and those sorts of things starting to distribute those products effectively.
Can the TradFi guys, are they going to get that?
But I think the TradFi guys need to get that. Like the TradFi guys aren't using...
They need to get it,
but they're not using Telegram bots, right? So it's the 900 million or 300 million emerging market users of Telegram in India.
They're going to be left behind. The TradFi guys are just going to leave them all behind. All the old
We're going to shed a tear
guys.
for them, Dan, or not?
Alex, what are you involved in?
Yeah, it's... So you ask about basically Bitcoin, layer 2 ecosystem,
L2s,
right? Yeah.
Also, what are you most excited about over the next sort of 6 to 12 months, aside from the Bitcoin price going?
The Bitcoin ecosystem. Okay. Excited about that. Excited about short-term Telegram games. The Telegram ecosystem, I think it has a lot of potential. But back on the Bitcoin, I think it's interesting that the number is 10 billion. Market cap of Bitcoin ecosystem tokens is 10 billion, which is about 0.5% of market cap, total market cap of crypto. So if you think, as I think, that there is a lot of things to build on top of Bitcoin, this is one of the places we want to be at.
Right. And what about outperformance? Or, we have ETH versus Bitcoin or Solana versus Bitcoin. People always, if you're a macro guy, they always want to ask you about relative performance. So, Darius?
Sorry, let me add something to the previous question before I answer this one. So, I mean, Richard mentioned that, we all came in here thinking, that there's going to be a tech disruption, right? But actually, I think the disruption in the next 6 to 12 months is going to be a lot more fundamental and simple. A very simple methodological disruption, meaning that, right now you have the TradFi guys trading, like CME trades 12 hours a day, 5 days a week, T+2 settlement, right? Whereas the crypto way of trading is 24/7, live margin, instant settlement, auto liquidation. So I think the disruption is going to be much simpler. It's going to be, Sam tried to bring the whole world to trade on FTX. I think it's the other way around. It's more about what the crypto world offers the rest of the world, and we start to see traditional assets, stocks, commodities, bonds trade the way that crypto does. Right. So, next 12 months, do we start to see the crypto world offer this methodology to the rest of the world? And I think that disruption, while subtle, actually makes a lot of difference.
How's that going to work?
So you start to see exchanges start to adopt this methodology. I think ASX tried to do this at some point as well, but there was more of a political issue. But as these guys start to adopt this methodology, you start to see liquidity change. I think it will come, maybe not in the next 12 months, but at some point. But to answer your question on Bitcoin dominance, I think there will be ETFs on everything at some point. But like I said, every ETF is a test of what the investor appetite is, and the question will be which is the next one that captures investor attention, the same way that Bitcoin did with the ETF. Okay,
so no specific view on one being undervalued versus the other, Richard?
Yeah, I'll give you a view on that. Absolutely, I think applications are grossly undervalued versus protocols. So I think the space has found a pretty good propensity to generate more block space as required relatively quickly, and we've seen, I think, kind of Ethereum's a little bit of a look into the future around other ecosystems. You've seen the proliferation of layer 2s, layer 3s, I think there's even some layer 4s. So people have been able to build block space out super fast, and the reality is they haven't been able to build lending markets outside of Aave anywhere near the speed, or they haven't been able to build dexes of the scale of Uniswap like that as well. So yet those applications are trading at 90% discounts to the leading protocol layer 1s, and their fees are kind of similar. So it kind of looks to me at the moment the application layer is generating about the same money. It's proving over the last 4 or 5 years that it's potentially more defensible than block space. It probably absolutely is. Yet it's trading at sort of 5 to 10% of the value of those protocols. Yeah. To me, that seems wrong. So, and we're in that sort of period of the development of the tech I talked about, where you're starting to see that distribution happen, and we're moving from that sandbox of sort of crypto natives with a ledger using MetaMask, as good as that is, to the mass user that's just using a Telegram bot or whatever else it is. And that's when you start to see those users come to those apps, and I think they're going to take over the protocols and way outperform them over the next 3 years.
Alex?
Yeah, I don't trade ETH BTC, so not really putting much emphasis on the ratio. But when it comes to ETH, metrics are pretty bad. They've gone back in time many years. But sentiment, I'd say, is even worse. What ETH needs is a catalyst. A catalyst. So I think that's the election. That's Trump winning. For me, is the way I see it is, if an election night Trump is coming ahead, somewhere between 11 p.m. Eastern Time, 2 a.m. Eastern Time, you start getting a good sense of who's going to win based on how the counts are coming on the East Coast. If you trade, you basically max long ETH. And in the meantime, fundamentals and it's overvalued, undervalued, I don't really know. Yeah.
Yeah, I see that question more from a vol lens, actually, meaning that undervalued or overvalued, not sure, but the vol spread would probably increase because we see liquidity draining out of alt and ETH into Bitcoin. So for example, Bitcoin versus ETH, the vol spread used to be quite consistent. It's getting a lot more volatile, and I think it widens. So lower Bitcoin vol, higher ETH vol, higher altcoin vol. So it could swing both ways. It could, it becomes higher beta effectively.
Yeah, but you're generally positive view on the Bitcoin. If we do get up to 100 plus, are you expecting the alt season that everyone's talking about to come? And I don't know if that's an outdated term, 5 years outdated. Now, it seems a little off, but I don't know that people know.
I think the market's matured a little bit, Dan, in terms of there's a much more idiosyncratic moves, right? Like past alt seasons, if you owned an underperformer, you probably still got kind of market beta and did okay, and if you owned the outperformers, you kind of made 10x or whatever, right? But it feels like the market, and you'd expect this as it gets more mature, as we go through sort of more cycles.
Wait a second, hold on a second. More mature, but now we've got, I heard, 10,000 meme coins per day are being produced. So, in a period where Bitcoin is doing well, you could imagine some of the real rocket fuel meme coins and some of the crazy stuff really go crazy. Is that going to die away? What do you guys?
Well, I don't think that dies away at all. I mean, it feels like like they all go through cycles like everything else. But it's a sign of where we're at when you're moving into a digital economy. People want to move fast. They want attention type assets, and that's where we're at. But I think if you looked at the market, we've even seen it over the last 18 months. There's been much more dispersion between the altcoins, right? So I think the concept of a alt season where whatever you own goes up, I don't think we'll see that again. I think we can particularly see a lot of altcoins materially outperform, but it's going to be for specific reasons. It's not just going to be for generalized liquidity flows. It's going to be because they've created something great, they've attracted a whole bunch of users, or they've done something that actually demands their price to go up.
So the space is really growing up then, in your view?
Well, it's still got a fair way to go. It's still got a little way to go, but I think looking at the market the last 18 months, it's hard not to draw that conclusion because it's been real different performance between you know, the
Because
people that have
things
been
haven't
achieving
gone
what they're
crazy
doing.
yet. People are still sober. I think on a break of 100 all the way to 150, it's going to get a little crazy again.
Maybe, but I don't think you can plan a portfolio on that, right? So
No,
we try to.
I love your Ave bet. I do agree with you. I think that's tremendous outperformance in the apps versus the protocols. But what about risks? Talk to me about like what are you concerned about? We don't have that much time left, so maybe just Darius.
Yeah, just a quick one. The risk landscape is getting better, right? I mean, post FTX now you have every custodian has tri-party solutions. Regulators are asking crypto players, you know, how they measure VAR and how they do margining systems. We're getting, like you said, we're getting more grown up. So I think that landscape lends itself to more institutional investment.
But what do you worry about?
I mean, very good question.
You can say nothing.
No, I mean, look, the credit space is coming back. You know, we're starting to see more lenders, borrowers come back in again. The credit space is always going to be a worry. So, you know, that's always one space we will go in with both eyes open and with a lot of trepidation.
Okay, you must have some worries.
Well, my key worry is Michael Saylor gets over-levered. I mean, people who've been around markets before can see those sorts of events can gather, right? And that's the sort of thing that none of us can control. But, you know, we've kind of seen that story before.
Alex?
Worried about three things. The first one is, and nothing about politics, is about prices and the regulatory environment. I'm worried about Democrats winning and the current regulatory environment continuing for another 4 years. Number one. Number two is I'm worried about being wrong about recession and we going into a very severe recession next year. That worries me. And the last one, actually, this one sometimes keeps me up at night when I'm looking at Bitcoin and my book, is what if Bitcoin decorrelates from the S&P? Which is ironic because for a lot of people, that's what they want, is they want an uncorrelated asset to bring it to their portfolios to basically increase returns subject to minimizing volatility. It's good for portfolios. My concern is that Bitcoin starts doing its own thing entirely, and adoption doesn't go as fast, and at the end is like Bitcoin eventually is digital gold, and I'm not bullish gold at all.
Okay, well,
yeah.
we don't have time now to talk about gold, but guys, I really thank the three of you for coming out and sharing your views with everybody, and thanks everybody for listening.
Thank you.
Thanks, Dan.
Thank you, guys.
All right.